This is our Forex blog for July 24th, 2014. These are our currency indexes, which makes it easy to decide which currency to buy, which one to sell. You want to, it's a visual representation of what each individual currency is doing. Just like the S&P 500 is an index of what the 500 biggest American stocks are doing. So before I go over this, let me just show you how our signals did today. They did pretty well. Again, the secret to trading is smaller losses, bigger wins. Here's your risk on the first trade. Pretty much broke even. Here's your risk on the second trade. Also broke even. Then had a nice big win, small win, pretty much break even. So you're left with, a nice big profit and about 5 or 6, maybe 7 pips with those two trades. Here is the pound dollar, which did a lot better, had bigger profits. We started off with a small loss, huge 25 pip win, huge 10, 20, 30, 35 pip win. So, it worked 2 out of 3 times, and yesterday, as you can see, it did pretty well too. Big win, pretty much break even, small win, 4 or 5 pip loss, 4 or 5 pip gain. So these cancel each other out. We left with a small profit, big profit, and break even. We're up to about 503 different signals that are in here now. So my focus years ago was doing training every day, but people always told me my trading systems were too complicated. As you can see, small win, small loss, very, very tiny loss, pretty much break even, very tiny win. So even most of the time we look for strong moves and we buy pullbacks, we use Fibonacci's, we use trend lines. If the market's kind of chopping around, basically I try to avoid it, and that's why there's not more trades. There's not a trade up here at the high because it's just kind of choppy, or it might have been statistically too strong to sell at that time. Here is the New Zealand dollar, which had a big drop yesterday, and our counter trend signals kicked in. There wasn't enough of a pullback to sell until right here. We'd rather miss trades than have 2-3 losing trades in a row. If you look for a couple bar pullback and you get short, you might catch a trade like this where you make money, and then you might lose here, maybe make a little bit here or break even. You don't want to get chopped up when the market doesn't have enough volatility, and that's why we kind of step aside. Some of our signals only trade from 2:30 to noon Eastern time. And here's the euro yen. Also did pretty well today. Sold here, very tiny profit. Sold here, nice profit. So we're up about 10 pips. Then we went long, rode this thing all the way up here, made 10, 20, 30, 40 pips. Went long again, and also made 10 or 12 pips. So you add all that up, you're at 60, 70 pips of profit today in the euro yen. One nice trade day like that per week, and if you have some losing days, you're going to end up for the week. Now, for those of you who want to discretionarily trade, again, this is our currency indexes. I think it's one of the easier ways of trading. You can visually see the euro strong. It's up near the previous day's high. It's going sideways in a nice little rectangle pattern. If it breaks out, it's very likely to go up. You want to trade this versus a currency that is in a downtrend and has maybe made a move up to a resistance area, or you can trade currency that maybe is up statistically too much, like the yen. It's up at the upper band. Most of the time our 2.0 white band is where price stalls and reverses in the currency indexes. So you could take a pretty high probability counter trend trade by buying the euro yen around 3.30. You're just watching the chart and seeing what happens. And as you can see on here, at that time you already knew it was likely to go up. All right, you're watching this. You have a nice little low here that it didn't make a lower low, broke out, and the risk versus reward ratio on this, and that's one of the few things I really look at, is huge. Even if you got out somewhere in this little pullback area here, or scaled out of your trade as it went up, even if you got, you know, half of that, you made 1.5 to 2 times more profit than your risk. And of course, the strong euro, weak yen, by the next pullback, usually these trains go at least 2 waves. So you got one wave up, second wave up. For the second wave up, you have a very high probability profit target by drawing your fib targets on here. And it didn't quite make it to the 1.38 fib target, but you do see right here the dotted line to 1.27, and it pretty much kind of stalled around there. So if you bought that little pullback right here, it didn't quite go to the fib 1.38 fib target that you would expect it to, but you still made over 2 times more profit than your risk. And that's the key to trading. So again, there's a ton of tools in our software that will help experienced traders. And for new traders and experienced traders, use our Forex Signals. They're very sophisticated. Most of these, as I said, there's 503 patterns that it looks for right now. I add 5 to 10 every day, and I try to add more rules to the ones that give silly trades that I had designed in the past. So I'm always making the old signals stronger, and they typically will give fewer trades in the future, but higher probability trades. But with 503 signals, clearly you're going to get a lot of trades with this system when the market's actually moving. And when it's not moving, what I really like about this system is that it doesn't, it's very picky. It doesn't get in and out when the market's just kind of chopping around, up and down, up and down. It doesn't get in at all. Look, up and down, up and down. It doesn't take any trade here. Up and down, up and down, up and down. It doesn't take any trade. Now sometimes, you know, the market does go up, but this kind of chop usually will get you killed. You could have 3 to 5 losing trades in a row if you had a system that got in a market when it's just chopping around and has no clear trend direction. So we avoid it. Of course, we're going to occasionally miss trades, but the point is, when you do see a pattern, you know that it has, you know, 10 to 35 different rules that all have to be hit before that pattern hits. You know, such as a new high. Here's a market makes a new high, a little bit of a pullback, which gave this signal here. So anyway, that's it for today's blog. We're going to be releasing a new version tomorrow, later in the afternoon.